In recent years, Indonesia's tax policies have undergone a series of adjustments aimed at strengthening the country's fiscal position. Among these changes, the most notable is the incremental raising of the value-added tax (VAT) rate from 10% to 11% in 2022, and is expected to increase by one more percentage to 12% by January 1, 2025. This increase has led the Indonesian public to oppose such drastic changes. There have been reports, discussions, and grievances all across the internet about this. But why? What's wrong with Indonesia increasing its VAT from 11% in 2022 to 12% in 2025? Isn't it just a 1% increase? Will it really affect many Indonesians? Or, probably the most important question that we need to answer here is, why is the Indonesian government even increasing the value-added tax rate? Will this even help Indonesia? Well, to understand this, it is first important to understand what a value-added tax is. Value-added tax is a form of consumption tax levied on goods and services at each stage of the supply chain, from production to sale. For instance, every time a product moves from one stage to the next, like from a manufacturer to a distributor or from a distributor to a retailer, a VAT is applied to the value added at that stage. Ultimately, the cost is passed on to the end consumer, making VAT a tax that directly impacts everyday purchases. A product or service that, for instance, would cost only 1,000 Indonesian rupiah with a 10% VAT will become 1,100 rupiah under a 10% VAT rate. With the VAT rate increasing to 11%, the same product would cost 1,110 rupiah. And when the VAT rises to 12%, it will cost 1,120 rupiah. While it may seem insignificant, there's a cumulative effect on household budgets, which can be significant, particularly for low and middle-income families. But it is important to know that Indonesia is not the only country that has a value-added tax. It is applied globally. Many governments around the world rely on VAT. Here's a graph on the comparative VAT taxes in Southeast Asia. As you can see, the Philippines has a VAT tax rate of over 12%, while Thailand has 7%, although that rate has historically gone up to 10% and is often subject to government discretion. Malaysia, after some policy reversals, ended up with a 6% sales and service tax, SST, having scrapped its 6% GST in 2018. Thus, Indonesia's 10% rate was neither the highest nor the lowest in the region, but it was a core contributor to the government's revenue stream. But beyond the region, Indonesia's value-added tax of 10% or even 12% is low. The average VAT rate among OECD, Organization for Economic Cooperation and Development, countries hovers around 20%. Here's an overall graph of many major economies out there and their value-added tax as compared to Indonesia, which really shows that Indonesia may need to increase its VAT to stay competitive globally. So, why impose a value-added tax? Well, it is commonly known that VAT taxes are one of the most important revenue sources for a government, because it is easier to collect them than any other forms of taxation, such as income tax. To put this into perspective, here's a graph on Indonesia's share of domestic revenue by source in percentages, data that we collected from CEIC. As you can see, Indonesia's government's revenue sources largely stem from income tax revenues, which have contributed nearly as much as 40% in every single year from 2015 to 2023. But the second biggest contributor is the value-added taxes and sales tax on luxury goods, where in the latest year available for 2023, showing that they contributed 27.6% in the total domestic revenue of Indonesia. Hence, if the government wants to increase taxes, One of the ways they can do so is by increasing this value-added tax rate. But why specifically the VAT and not other taxes? Well, it's because value-added taxes are always considered more stable during economic downturns, since consumption does not drop as drastically as corporate profits or personal incomes might. Furthermore, Indonesia is a big economy. It has more than 270 million people living in it, making them the world's fourth most populous nation. Being so big, the government of Indonesia then has a huge responsibility of ensuring that they provide the necessary infrastructures, healthcare, education, and social programs to their people. If not, then why bother having a government if they can't provide the basic necessities to their people? Right? Well, that's a core reason behind Indonesia's hike in their value-added taxes, and it stems from the government operations. Over the past few years, we have seen an increase in the deficit of the government's fiscal budget. That might not really make sense at all, so let's pull up a graph on the government budget deficit per year, data that we collected from the Indonesian Ministry of Finance. What this data is basically about is the annual difference between the government's revenue and its expenditures. In simple terms, a fiscal deficit occurs when the government spends more money than it earns through various sources, such as taxes, customs duties, and other forms of revenue collection. For Indonesia, the deficit has widened over the past few years, especially from 2020 to 2022, with the year 2020 showing a big deficit of 6.1% to GDP. This is a major part behind Indonesia's reason for raising their value-added taxes, because these deficits put a strain on the country's economy. When a government runs consistent deficits, it often relies on borrowing to cover the gap, which increases national debt. Here's a graph on Indonesia's national debt to GDP, data that we collected from the International Monetary Fund. As you can see, their debt to GDP increased from just 30.6% in 2019 to over 39.7% by 2020, and with the latest data available for 2024 showing a debt to GDP ratio of 40.5%. But in all honesty, this isn't really a lot, especially when we compare it to other neighboring economies. As a matter of fact, let's table out the largest debt to GDP holders in Southeast Asia. As you can see, Indonesia is one of the lowest, with the lowest of the entire region's big five economies being Vietnam, and then the second lowest is Indonesia. So, knowing this, why even increase taxes to combat debt? Well, while Indonesia's debt might be low, the increase in this VAT is to ensure that in the long term the debt does indeed stay low. Instead of allowing debt levels to rise unchecked, the government is taking proactive measures to prevent future fiscal challenges. A second reason behind Indonesia's increase in value-added tax is because they also need to align themselves with international standards. Indeed, Indonesia's value-added tax rate might become one of the highest in Southeast Asia, but when we compare it to the OECD, it is still far, far low. Indonesia might be best compared to larger economies, considering it is one of the world's biggest ones out there, and is expected to grow even bigger. A third reason, and probably the most important one of all the reasons that we will discuss today, might actually lie in the fact that Indonesia's value-added tax, even though it is competitively high in Southeast Asia, might not really be collecting enough. What we mean by that can be seen in a graph right here. This graph is the share of value-added tax to GDP by percentage between Indonesia and various group comparisons for the year 2022, data that we collected from the OECD. As you can see, in 2022, Indonesia's value-added tax to GDP is just 3.4%, whereas the Asia and Pacific Group has over 4.8%, and even Middle Income Group at over 5.5%, and the OECD average country at 7.1%. What these data basically means is that Indonesia collects significantly less revenue from its value-added tax relative to the size of its economy compared to other regions and income groups. Even if we compare Indonesia to other economies like the Philippines, Thailand, China, and even the United Kingdom, we get to see that the share of their VAT relative to their economy is very low. By increasing their VAT taxes from 10 to 11 and then 12%, they hope to catch up to their neighbors and even global averages. But then again, why is Indonesia's VAT to GDP so low? Well, there are many reasons for this, but one of the biggest ones is due to Indonesia's economic structure. Indonesia has a substantial informal sector that operates largely outside the formal tax system. This informal sector includes small-scale businesses, street vendors, and other unregistered enterprises that do not regularly pay taxes, including VAT. As a result, a significant portion of the economic activity in Indonesia is not contributing to VAT revenues, limiting the government's ability to fully harness its tax potential. Furthermore, it is also known that Indonesia's tax to GDP is low when we compare Indonesia to many other economies out there. Here's a graph on Indonesia's tax as a share of GDP, data that we collected from the UNU Wider Government Revenue Dataset, 2023. As you can see, Indonesia's tax as a share of GDP, as of the latest year available in 2022, is just 10.4%. How low is this? Well, let's add Thailand, the Philippines, Vietnam, and Malaysia. As you can see, Indonesia's tax as a share of GDP is the lowest when we compare it to these economies. Indonesia's tax to GDP is even much lower when we compare it to other G20 economies like Brazil, South Africa, China, India, and so on. Hence, by increasing VAT taxes, this would not only increase Indonesia's VAT to GDP, but also their overall tax to GDP. Now, as we mentioned earlier, the increase in VAT taxes has been met with public criticism. And that's because if VAT increases, so does the prices of goods and services to consumers. This isn't what most people want, who want to see their everyday goods increase in prices, after all. But this is more terrifying when it is felt by the low and middle-income households who do not have a lot of money. Thankfully, the government has introduced a lot of money, with some reports saying that they will give an economic stimulus package totaling approximately 827 trillion rupiah, $51.5 billion US, to mitigate the impact of the VAT hike on consumers, especially low and middle-income households. The package ranges from electricity tariff reductions to fiscal incentives and even VAT exemptions. Beyond the increase in VAT taxes from 11 to 12%, it has also been reported that VAT will be charged for the first time in various goods and services, like premium quality food and services, including international schools and high-end hospitals. Sri Mulyani, who is the current Indonesian finance minister, stated that this is in line with the principles of justice. The 12% VAT is also imposed on luxury goods and services consumed by people who can afford those. So, do you now support the increase in VAT taxes? But anyway, do let us know what you think. Thanks for watching.